All right, welcome to the Gem of All Trades channel. Just want to give you an update on the trade I took last night and talk about trading psychology and to help you with become a better trader. So the goal of this, couple minute video is just to talk about why I took the trade entry. You can watch that video from yesterday. I'll put the link in the description if you want to watch the whole the explanation of why I took the trade. And then secondly, what I did to monitor the trade as the trade was developing because it began to go against me. So remember, this is not financial advice. This is not what trades to take, but actually I just shared a trade that I took that you can learn the process of thinking to become a better trader. I'm going to do these more often as I do live trades. As I actually trade, I'm going to start recording them a little bit, or at least saying when I enter. And now I've already exited the trade. I'm going to tell you where I exited the trade and why I exited and how I monitored my psychology through it. So right here at 81.39, I entered at 81.39. That was my price. That was right about here. The quick reason why I took the trade: I saw divergence on I saw two different types of divergence. Secondly, I saw that we had come and tagged the Fibonacci. Let me get this perfect here. We came and had a reaction. Let's see if I'm getting this right. There it is. Came and had a reaction off the 1276 Fibonacci level. So when we had this reaction, and basically I took that trade. I said, hey, this is probably going up. This is a corrective. I was thinking this is a 1, 2, 3, 4, and we were going up for 5. But actually, it's something different. I'm going to share another video as to what this all is, all that corrective waves, what that is, and what we're doing there. But that being said, that's what I thought was making. So I entered a high probability trade. So I entered long there, expecting price to come up here to somewhere around the $83, $84 mark, $83.5, $84 mark. Well, what happened to me almost immediately with 1, 2 15-minute candles, they took price down. Price came down strongly. Now, what would you have done if you entered the trade here and then all of a sudden price just started shooting down really, really fast? What would you have done? This is why most traders and even me in the past have lost money, because I'll take a trade and then all of a sudden it goes against me and immediately, and it goes down fast, and it gets scary, and so you got to manage those emotions. So why did I not freak out? Well, number one, I had my Fibonacci's on on the screen. Okay, so basically, what do we know? We know that if this comes down and tags the 1276, we've got a correction and we're going up. But if it comes down and tags the 1618, we got a third wave. So this is a 1, 2, 3 wave, right? And so because we have a third wave that bounced off the 1618, I know that we've got to be coming up. We've got to be coming up for a fourth wave. So what I looked for last night was an exit. I looked for basically, hey, the trade might be going against me, so I knew price was going to come back, so I just waited it out. Price came all the way down here to the $79. It tagged the $80 mark and bounced off. I also had this trend line drawn as well, and I said if it bounces off that trend line, we're probably going to be okay. We're going to have a bounce there. I was also looking for a fourth wave coming up. So because of those two things, I didn't freak out, though the trade didn't go exactly as I had planned it would go. Well, it did come back up, and it came back up to the 82.28 mark, and I didn't get out of it. I waited for it. It came back down. I was like, oh no, it came back down past me, and it's gone against me, but it came back up. And what I saw it forming as I was monitoring the trade, it started to form this ascending triangle. Right there. What an ascending triangle is when price comes, hits a level and gets rejected, but price pushes back up to it, and it gets rejected again, but at a smaller amount, and then it comes in and hits it again and rejects it even a smaller amount. So the rejections get weaker and weaker. So as the rejections get weaker and weaker, that tells me the bulls are overpowering the bears, and so eventually there's one final push and we bust through that level, and that's how an ascending triangle functions. That's how it works. So that's exactly what we did. We came up. Now, why did I get out of this trade? What was my exit strategy? Well, I was looking for about the $84 mark. So as price came up here to the $84 mark, or approached it, I looked at the top of this line here. I said, according to my Elliott count, I'm not expecting this to make another high, although it could if my count's wrong. But so my trade was to get out somewhere around the $84 mark. And so what I did is I looked for something called divergence, which you might already know of, but I'm looking for divergence on the on the 15-minute chart, and the 5-minute chart or the 15-minute chart. So you actually can see some divergence right here. If I put my line right here, you'll notice the dotted line up at the top. Um, you'll see that it made a high with the divergence there, but the next peak made it on the RSI down here at this bottom part. It made a lower low, but it made a higher high. That's divergence. That means as the price goes higher, the power of that move is getting smaller. So that means the strength is wearing out. So that was my exit signal. So once I saw that divergence on the 15-minute chart, because this was a 15-minute trade, I got out right about there. In the $83 range and that ballpark. So I had a trade from $81.39 to $83. I made I made a little money there, and I added it to my account. Now I've got more as price comes down. As I expect price to come down, I can enter into another trade, and I've got more to buy with now. So that's the idea of trading. You always want to, whatever you buy at, you want to sell it for higher. This wasn't a fantastic, $10,000 trade or $1,000 trade or anything like that. It was just a couple $100 for me, but a couple $100 is a couple $100, and it was a nice little quick trade, a little scalp trade. I knew this wave was coming up, and so that's what we did. So there's the exit. That's why I came up. I looked for that divergence. If I go down to the 5-minute chart, I can't remember if it shows it on the 5-minute. I think it does. Yeah, it sure does. So here's your divergence if you want to see it. You got a higher highs being made up there. Yeah, okay. Sorry. Get out of my way. There we go. And then we can make another one down here, right? Same peak, boom, boom. Once we see that divergence, we know it's time to get out of that trade. So we got out, and price, you see what price did right after I got out. Boom, it took a dive, and I was glad for it. I think I made the right decision. So like I said, once it hit this peak up here and then it started to pull back and I saw that divergence, we pulled out of the trade. So there you go. That's the update on the trade that I took last night. It was a successful trade. Happy to do it. Hope that helps you as you think about trading and growing as a trader. All right. Have a great Friday, man. It's a good Friday. The Lord rose, died on the cross for us, and we'll celebrate His resurrection on Sunday. So, hey, happy Good Friday to you.